Hello folks, this is Raj Sastry from Raj Option Trading. Today is May 17, 2021. I will cover financial services stocks today. So with that, here are my favorite stocks here. First one is Futu Holdings, ticker symbol FUTU, great company. Next is PayPal, PYPL. It's again a great company, fintech play. And third one is SI, Silvergate. It's also a great company and it's a bank that's focused on the Bitcoin investments. So with that, let's dive in. If you look at the sector performance, so far, year to date, energy is the first one leading the chart, and next one is financial services. It's done great, and we have basic materials, industrials, and so on and so forth. And technology is all the way in the bottom. It's done only 2.3% year to date. But if you look at the 1 year, performance here, we have financial services on the top. So all these financial services like banks, insurance companies, they've all done nicely. So let's dive into some of these financial services stocks and see if it's worth investing at this point. So with that, here I got a few of these financial services companies. As you might be knowing, there are various categories of financial services companies. First one is credit services. This is where some of these credit card companies will come into play. We got Visa, MasterCard, PayPal, American Express, so on and so forth. As you see here, in last 1 year, this is 1 year performance. DFS Discover card has done very nicely, 210%. Then we got SYF has done nicely, 183%. And then we got Capital One done nicely, 175%. So, but the big companies like Visa, Mastercard, PayPal, they have not done that great, as you can see here. And then we got financial data and stock exchanges type companies. We got here SPGI, CME, ICE. These companies have not done greatly. I've been watching many of these very carefully. Um, you know, Big companies like SPGI, CME, even ICE for that matter, have not done that great. It's in the positive territory, but not as great as fintech or financial credit services companies. Then we got big banks, diversified big banks. They've done very nicely. As you can see here, Wells Fargo has done very nicely, 105%, and so did Citigroup, Bank of America, and JP Morgan. And then we got capital markets with Morgan Stanley, Charles Schwab, Goldman Sachs. As you can see, many of these have done very nicely, with the exception of MKTX. I think this is where you do some of the bond trading and whatnot. I think they have done a little not so great, but it's a great company nonetheless. So, some of these companies are still doing nicely. Next, let's look at financial, banks or the regional banks as we call it. These companies have done very, very, very nicely. As you can see here, nice performance around the, everywhere. With I think companies like SIVB has done very nicely, 234%. That's a great performance overall. I think overall the regional banks have done nicely. And then you got financial, insurance companies. They've done okay, not too bad at all. And then we got insurance brokers. They've also done okay, not great, but okay. And then we got actual life insurance companies. They've done pretty good. So now let's dive into some of these companies and see what's worth investing at this point. So these are the top financial services stocks. I made sure the actual volume is greater than $1 million. And as you can see here, these are all large cap stocks. And I sorted these companies by 1 year performance. Company at the top here, Futu Holdings, has done very nicely, 853% in 1 year. And from there we got descending order. Next company, IVZ Invesco, has done 312%, and from there it's a descending or decreasing order, as you can see here. And if you look at some of these companies, I highlighted few companies here. For example, Futu Holdings has done very nicely. It's a $121 stock, and as you can see here, they got $337 million in sales. But from a sales growth perspective, both 1 year and quarter over quarter, they've done very, very nicely. This is the reason I like this company, has done nicely. And if you look at the way they are doing, 1 year 853%, 1 month positive, but off late from 3 month, 1 month, 2 week, they are pretty much in negative. But in 1 week and 1 day, they are doing well. So this shows, they're trying to make a comeback at this point. I think it may be worth investing in a little bit of your money and ride along this company. Then we got Invesco. It was a low dollar stock, $27.76. And as you can see here, from a growth perspective, sales growth perspective, that's not huge. It's just 3.80% quarter over quarter. They got nice gross margin, as you can see here. And I think they've done very nicely, 312%. And then you got Ali Financial, they've done very nicely also. And this has got good growth also, as you can see here, 11% in 1 year and 27% quarter over quarter. And they've done very nicely, in 1 year. And some of these companies like Discovery, Synchrony, Fifth, Third, Capital One, they're also nice. I typically buy these companies when they're a little bit down, but as you see now, many of these companies are at their 52-week high. You got to be a little bit careful. Wait for a pullback and then buy. If you look at Futu Holdings as an example, they're down 40%. It's okay to nibble a little bit at this time versus other companies like these, which are already at 52-week high. Then we got a couple more here: CFG, Regional Finance, First Horizon. All these companies, as you can see here, got positive sales growth. And many of these are low price stocks here, and they've done very nicely in a 1 year time frame. And I got few more here: KKR, Charles Schwab, Huntington, Goldman, Prudential. Same story, positive sales growth, nice 1 year performance. And some of the other stocks here, like MetLife and whatnot, it's okay to buy them. These are not bad stocks, but only highlight it. They've not done great from a revenue growth perspective. They're in the negative territory when it comes to revenue growth. So with that, let's look at the next slide here. Continuations, again, large cap stocks. And, these are, we got Wells Fargo at the top here, 101%, very, nice performance here. And Wells Fargo, as you can see here, even though they're negative in 1 year, they are positive quarter over quarter. So it's showing, they are improving as we speak. I think they got some CEO change, and I think they are cleaning up on their side, doing nice job. Then we got Bank of America, done nicely, 101%. I think it's a great company. Then we got a couple other companies like Ben Franklin, TFC, done nicely, and they also have good growth here. Especially Ben Franklin has got good growth, and TFC has got good 1 year growth. There's an Indian bank here, ICICI. It's done nicely, 95%, and it also has got sales growth. Then we got big bank here, JP Morgan. It's one of the steady Eddie, stocks. And, these companies will benefit if Fed raises the rates. And right now it's at almost, 52-week high. I would wait for a small pullback before you invest in JP Morgan. Then we got Fidelity, HDFC Bank, and a couple others. These are all the good players here. HDFC Bank is down 15%, as you can see here. And PayPal, the big company here, fintech play, down 20%. It's again a recovery play. As you can see here, it's down all the way from 3 month, 1 month, even 2 week. It's getting a little positive here. And 1 week is getting a little positive. I think at this point it may be okay to buy a little bit of PayPal. Looks like there is some turnaround, slowly. And Progressive also great company. I think they're doing nicely. They are in the positive territory all the way from 1 year into 1 week. They're doing well. We have few more here, large cap stocks. I will not go through them in great detail. You can just go through here. Allstate, Apollo Global, done nicely, and other big companies like Visa, ICE, Rocket Mortgage, and these are all have not done nicely. Especially Mortgage down 18%. It's a good company, but I think short sellers are squeezing this company right now. That's why it's down big time. And I also love, Visa and Mastercard. Even though they're down, it's good to buy them. I think as the market and economy reopens, these will be the big winners. I also like SPGI. It's a great company, and they're like 1 year is 26%. Overall, it's a good company. Next, let's look at small and mid cap plays here. We got bunch of these companies. There are a lot of my favorite stocks also. Like if you see companies with a positive sales growth here, like Marathon, Silvergate, Tiger, I think these are all have got positive sales growth, and they're also down big as you can see here. I would buy these companies. They're down. They Two of these are down even in the 1 day frame. I would buy a little bit of these companies here. And as you scan through this, we got some other companies here, PacWest and Navient, QFIN, one of my favorites again. It's good to buy these companies also on a pullback and hold it for a long time. And then you got, as you see here, Jefferies. That's also a great company. Positive sales growth here. Unum, same story. And some of these companies, as you can see here, positive sales growth and nice 1 year performance. I would invest in those companies. And next we got few more here, Federated, and it's got $31 stock and done nicely for 1 year. And as you scan through this here, we got Select Quote. Select Quote is $21 stock, but as you can see, 35% down from 52-week high, and they've not done much, just 5%. Companies really, doing badly of late. I would wait a little bit for a turnaround. Right now, it's still in the path, like it's going down on a 3 month, 1 month, 2 week, 1 week, even 1 day it went down. I would wait for a little bit a signal to on the positive side before I pull the plug. With that, thank you very much. Happy investing and trading. Please subscribe. Thanks.